Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about why do stocks go up so much sometimes? Why do you all of a sudden look at a stock one month, and then all of a sudden when you look at it the next month, that stock's gone up 20, 30, 40, 50% in such a short amount of time? What causes that? Well, there are really 5 different reasons on why a stock could shoot up massively in such a short amount of time, guys. So that's what we're talking about today. Why does this happen? So I hope you guys enjoy this today. I want to explain this fully. There's really only 5 real reasons, or 5 main reasons why this event even occurs, guys. So let's go ahead and get into this. Hit a thumbs up if you enjoy, and let's talk about this, guys. Number 1 is a major investment fund, a big hedge fund, a big mutual fund of some kind, adds a lot of shares. So maybe they go bullish on a stock for whatever reason. Maybe they were on the yacht with the CEO and maybe some information got passed there where it might be a little bit of inside information, but who the hell knows, because it might have just been them two on the yacht. Like who's watching from the skies, guys? You never know what's going on. Maybe they just read the annual report and really liked that company. I don't know, maybe Warren Buffett just all of a sudden starts opening up this annual report and he's like, I love this company. Let's go out and buy $3 billion worth of shares over the next month. Like that's obviously going to shoot that stock up massively, guys, especially if it's not a company that's in the hundreds of billions of dollars or something. So when big investment funds add shares in a major way, that just creates a lot more buying opportunities and selling opportunities, generally speaking, just because when you have a big investment fund come in a stock, there's so much money flooding in that stock. There's so many shares they need to buy to accumulate a big position. Like if you're running a $50 billion hedge fund, or that's got $50 billion under capital, or something like that, guys, a big huge investment fund, you need to add huge positions. Like those type of funds are generally only looking to add hundreds of millions of dollars, if not billions of dollars worth of an investment in a stock at a time, guys. And they'll do that over a couple week course of time, maybe a month. So sometimes you'll just see a stock and it just keeps going up, and there's really no news behind it. There's like, why does this stock just keep going up day in and day out? It's up another 3%, up another 4%, and the market might not be doing much at that time, and there's probably no news with that stock. And you're like, why does this stock just keep shooting up? A lot of times, guys, it's just big, huge mutual fund managers or hedge fund managers are adding shares for whatever reason, whatever their reasoning is behind it. A lot of times that's happening, guys, and they don't have to disclose that until basically the next quarter. So you wouldn't even know they added a bunch of shares, until basically the next quarter comes around, and those type of things, guys. So that's the first one. The second reason is possibly a short squeeze. Now, usually this is a 1 or 2 day event when this happens. So basically you can go long shares, which is the thing I preach more than anything on this channel, making long-term investments, thinking about a stock over the next few years. Make an investment. There's also the other way you can go, which is basically shorting shares. So when you're shorting shares, you're essentially betting a company is going down. So I don't know, you're all of a sudden bearish on Apple. You think the next iPhone is going to be junk and Apple's done and whatever you think, okay? So you go out and you short shares. So you're basically betting that Apple shares are going to go down. And you can cover those shares whenever you want. You can, rebuy them and purchase them, and maybe you get them at a much lower price because you shorted those shares. Now, if there's too many shorts in a stock and then that company does phenomenal, that will a lot of times cause a short squeeze, which causes the move upward to be even way bigger than expected. So let's say there was a massive amount of short sellers in Apple stock. Like everybody was just like, yeah, Apple, they're done. We don't believe in them. Their next iPhone's going to be crap. It's going to be delayed or whatever, okay? Whatever reason the shorts have, that's their reason, okay? So massive amount of people are short those shares. What happens is all of a sudden if Apple comes out and they have these phenomenal numbers and their phone's great and all these type of things, then all of a sudden the short seller's like, shit, the stock's going up. We need to cover now. We need to get out before this, because when you short shares, you have unlimited opportunity to lose money. So if you go long shares and that company goes bankrupt, you lose 100% of your money, right? When you short shares, you can potentially lose thousands of percent in money, depending on how much the stock goes up over whatever course of time. You could lose 200%, 300%, 500%. Like it's literally unlimited amount you can lose when you short shares. So if a stock starts moving up in a big way, a lot of short sellers will start buying those shares back. When they buy those shares back, that means there's even more buyers out there at the time, guys. So it pushes the stock up bigger and bigger and bigger, and it's like a compounding effect, and usually this is like a 1 or 2 day event, and it's just a mess. And this is why a lot of times you'll see some of these stocks stocks will move up 20, 30, 40% in a day. A lot of times it's because that stock had a short squeeze. A lot of people were negative on it. A lot of people had short positions, and you had a bunch of buyers come in to buy those shares because, you know, whatever numbers they reported or whatever happened, the stock shot up, and then those shorts had to start covering, guys. And it's just a mess when that happens. So that's the second reason. Three more here. So the third reason is if insiders buy a bunch of shares in bulk. If, you know, a big insider adds a few $1 million worth of shares, generally that's such a bullish sign out there that investment fund managers take note, hedge fund managers take note, and generally a lot of big investors who are just individual investors will see that and be like, okay, that CEO just added $5 million worth of shares of their stock. They obviously believe in this company a lot to be making that type of move into the stock. They obviously believe the turning point is happening with this stock. Now, it's got to be a lot of money. It's got to be in the millions, if not tens of millions of dollars to really get people's interest. If somebody just adds $50,000 worth of shares, if the CEO just has $75,000, like no one gives a crap about that. But when somebody makes a big move like Steve Wynn, when he was buying millions of dollars and tens of millions of dollars worth of shares, guys, when he did that, when the Wynn stock was down in the 60s about a little over a year ago, people took note and they were like, wow, Steve Wynn's buying mass amounts of shares right now. He obviously assumes this price is way undervalued for his stock. Maybe I should follow suit. And then all of a sudden, some of these hedge fund managers and mutual fund managers all start following suit, and just regular investors too, they start buying the stock because they're like, why would this CEO, who has more knowledge on the company than anybody by far, more inside knowledge, like literally anything, any type of information this person wants, they have it at their disposal. If they're buying mass amounts of shares, they're risking tons of money. They're not just going to risk tons of money just to risk tons of money, guys. They would rather put that money in, I don't know, a CD account or put it in some other investment if they believed in it more. If they're buying those type of shares, guys, big, huge amounts, that probably means something good is going to happen with that stock either in the short term or probably more than likely over the long term, over the next few years, as generally CEOs are kind of looking over the next few years. So that could absolutely cause a stock to go up majorly. The fourth reason is basically if there's speculation of a buyout happening, or if there is a buyout announced, then a stock can move up huge, guys. So you see it all the time where there's speculation about so-and-so company is going to buy XYZ company. And then all of a sudden, you know, XYZ company stock moves up massively because it's some report it came out of, you know, someone that's somewhat of a credible person and whatnot, and it comes out of all these media outlets, and that stock will shoot up because they'll say, you know, XYZ company is trading at $30 a share, and they're talking about, you know, ABC company wants to buy them for $40 a share. So a lot of people will move into that stock as fast as possible because they feel like that's probably truth. And a lot of times, I'll be honest, a lot of times these buyout rumors, they're actually accurate. The majority of the time, at least from my 9 years of investing, the majority of times buyout rumors came, there was actually truth to it, guys. A company was actually trying to buy that company and maybe it failed to go through, or they came out before anybody announced it and it was actually true, guys. I don't know who leaks this information, and it's really bad and it shouldn't be happening. I mean, it's one thing if, you know, the Cleveland Cavaliers try to trade some NBA player to another team and that leaks out, but it's another thing when it's business. But it happens all the time, guys. This stuff gets leaked before the executive management teams of either side a lot of times even announce it. So if that happens, or if the company actually announces they're going to do a buyout, generally that stock will go up huge, because generally if another company acquires another company, they're going to usually pay between a 20% and 40% premium for those shares. So if they announce that they're going to buy the company for 30% premium, you better believe that stock is going to go up at least 20 to 25% that next day, and maybe it'll leave a 5 to 10% cushion just in case the deal doesn't go through, and you know, whatever government agency does not allow that deal to go through, guys. But that's the fourth reason there. The fifth reason is basically if an unexpected earnings is phenomenal and the guidance is phenomenal, this will a lot of times make a stock shoot way higher, guys. So if a company was expected really bad earnings and they just reported knockout numbers and they report great guidance, then a lot of times that stock will shoot up massively, at least in the short term, if not over the long term, because it'll just, more and more investors will see the news out there. It'll attract more and more people to look into the company, to buy the company and be like, wow, this one's on the right path. They're growing like crazy right now. I need to get in this one before more people realize that this is going on over here, right? And more investors start flooding in. So that's what happens a lot of times, guys. Like, a lot of times, you know, you'll see a company that they're supposed to report some crap numbers, and then all of a sudden they come out and they just report these bombshell numbers, and it's like, whoa, how'd they do that? And then what happens, generally speaking? If their numbers are great and their guidance is great and they were expected to not report those great numbers, a lot of times that stock shoots up massively, guys. So those are the 5 reasons on why stocks shoot up massively, especially in the short term, guys. That is it. I mean, over the long term, over the long haul, generally it's just execution. A company's execution, how the execution is over the 3-year, 5-year span, that's going to decide really whether that stock goes up or down. But as far as the short term, over a few weeks, a few months span, maybe a few days span, like these are the 5 things that really move stocks massively in a short amount of time, guys. So I hope you enjoyed this. Hit that thumbs up button if you did. Leave me a comment if you have anything to say about this video. If you have anything to add, I would love to hear from you guys. Check out my book. It is linked in that description. It goes through my entire stock market strategy and how I pick stocks. If you just came across this channel, you may want to subscribe. We talk personal finance in the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. Thank you for watching, guys, and have a great day.